Good morning, traders from whichever side of the country world you're watching me from. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM East Africa. Now, a quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but don't worry. I'm here to help you look at the markets the right way. Starting off with the promotions that we currently have ongoing. Now, we just concluded a few promotions, but there are many more that are due to come. And how do you join them? You go over to your HFM under the promotion segment. Let's look at the battle of the elite currently at the moment, whereby you have an opportunity to become Kenya's Dawn or Biz, claim the crown. 650,000 Kenyan shillings is up for grabs for number one. 260,000 Kenyan shillings is up for grabs for number two. And number three is going to walk home with 130,000 Kenyan shillings. We are going to have 10 winners in the lucky draw, walking home with 26,000 Kenyan shillings each. Now, looking at the leaderboard currently, we only have one person by the name of Sami who's up 47.65%, meaning if you open this account today and you just make $1, you will be on the leaderboard and stand a chance to win the prize pool. We have these and many more on the promotion segment on our website. Once again, the first 5 did conclude yesterday. We are going to announce the winners very soon live on Instagram. We shall notify you who's going to be the lucky winners who are going to walk home with the 65,000 Kenyan shillings. Now, switching gears to the earnings. Once again, if you go to the tools and education segment on our HFM website or application, we do have the economic calendar and the earnings calendar. Currently, at the moment, it is earnings season, whereby we are anticipating earnings from major companies. Yesterday, we did have Netflix, we had Tesla releasing their earnings. Today, we are going to have Barclays, Nasdaq, Tal Education Group. We are going to have Hasbro, Hilton, S&P Global, AT&T, who's going to release their earnings before market open. Alcoa, they are going to release their earnings after market close. We are going to have IBM release their earnings also. SAP is going to conclude the day. Then tomorrow we are going to have other companies releasing their earnings also. This is going to be very important because it's going to affect price action, especially if you're looking at US equities. And how can you look at these opportunities in the markets? And I'm here to help you digest this data, find opportunities. Why are the markets behaving the way they are currently at the moment? Now, moving over to the economic calendar, this is whereby we usually start our day. We generate our ideas from the economic calendar. We look at what are the most likely pairs to move today, starting off with Japan, whereby they did release their balance of trade earlier on in the morning at exactly 2:50 a.m., whereby the data did come out slightly worrying. Looking at the Japanese economy, they do depend a lot on exports. Now, if they're importing more than they're exporting, it means something isn't right in that economy. Now, looking at the data currently at the moment, the merchandise trade balance is released by the Ministry of Finance, is a measure of balance between amount of imports and export. A positive value usually shows that there is a trade surplus, while a negative value shows there is a trade deficit. Now, Japan is so much dependent on exports that the Japanese economy relies heavily on trade surplus. Therefore, any variation in the figures influences the domestic currency. If a steady demand in exchange for Japanese export is seen, that will turn it into positive. We have looked at the data coming in negative today, meaning the Japanese economy actually did import more than they did export. Now, looking at the Japanese economy, could this prompt Bank of Japan to increase rates in the near future? And this is something that we want to look at, and we shall switch gears into the charts in just a moment's time. We have started a segment whereby I would want you to engage with me. Which are some of the assets that you want us to look into? Do you have any questions that are Forex related that you would want answers to? Kindly put it in the chat section. I'll be glad to be of help. That was the release from Japan. And if I do click on read the official report, this is the document that was just released, whereby we have seen the Japanese economy actually import more than they did export over the past calendar year. Quite interesting to see. Now, this was September's data. Now, moving over to the day, we did have inflation data coming in for the British pound, whereby starting with the retail price index, the year-on-year release. Now, this is going to look at data how prices has moved at a retail level. Now, it's widely considered a key measure of inflation that indicates an accurate reflection on the cost of living. A high reading is usually seen as bullish for the British pound, whereas a low reading is usually seen as negative or bearish for the British pound. Now, we did have the retail sales, but the highlight was going to be the consumer price index, or the CPI data itself. Now, retail is going to look at the retail level, non-consumers, it's going to look at the consumer level, whereby this is the measure of consumer price inflation, and it is the rate at which the prices of goods and services are bought by households, either rising or falling. Now, it is the inflation measure used in the government's target. This is the data that central banks look at. How are consumers essentially pushing money in the economy? Are they buying goods and services? If they are, it means there are going to be more British pounds in circulation, which in turn reflects to a higher reading. Now, if you do click on read the official report, it's going to take you to another tab whereby this is the official document that was released. As you can see here from the IP address, this is gov.uk, meaning this is a government website, and this was the official information that was released at exactly 9 a.m. whereby we did see the price index, including owners, occupiers, housing costs, rise by 4.1% in the 12 months to September 2025, which was unchanged from August. Now, on a monthly basis, the index did rise by 0.1% in September 2025, and it did rise by 3.8% in the 12 months to September of 2025. On a monthly basis, the CPI was unchanged in September as in September 1 year ago, which was 2024. Now, transportation made the largest upward contribution to the monthly change in both CPIH and CPI annual rates. Recreation and culture, food and non-alcoholic beverages made the largest offsetting downward contributions. Now, the core CPI, which excludes food and energy, alcohol, and tobacco, did rise by 3.5% in the 12 months to September of 2025, down from 3.6% in the 12 months to August. Now, the CPI goods annual rate rose slightly from 2.8% to 2.9%, while the CPI services annual rate was unchanged in September. Now, looking at the data, this was the entire document, but we have seen the main drivers were transportation, whereby they made the largest uptick to the upper side. And we want to look at the data here. How did it, what does this mean? When this data comes out positive or negative, what does it mean for you as a trader? How can you look at these opportunities, find trading setups on the charts in the markets? And we shall switch over to the charts. Once again, if you have any inquiry, which assets would you want us to look into? Now, moving over to the gold prices, whereby yesterday was quite interesting. We did see gold prices fall the most since 2013. And why is this happening currently at the moment? Now, yesterday, gold prices tanked more than 6.5% in a day, in less than 12 hours of trading, leading a broader metal sell-off as investors appear to step back from a record buying frenzy. Now, gold futures once again did drop to around 41.30, paring back earlier losses after falling as much as 6.3%, marking the largest intraday drop of the metal since a 6.3% plunge in June 2013. Now, why is this happening? Could we start seeing profit taking on the precious metal? We have been seeing gold prices soar to the upper side. Silver has been climbing aggressively to the upper side. But could this be the time whereby institutions are taking their profits? Or could this be a short-term retracement for prices to continue moving further to the upper side? Now, the government of the United States of America enters day 22 of the shutdown, but there could be talks of peace and maybe before the end of the week, we might see the government of the United States of America reopening. Now, yesterday, the Senate Republicans met with President Donald Trump over lunch at the White House on day 21 of the government shutdown, whereby they did present a united front to call for Democrats to vote to extend funding. Now, the president said Republicans will not be extorted into giving into Democrats' demands, an indication that any end to the shutdown remains quite far off. Democratic leaders called the lunch a pep rally, and they did mention and reached out to president in the hopes of kickstarting negotiations over a potential deal to extend healthcare tax credits. And this is whereby we are having the biggest war between the Democrats and the Republicans. It is because of the Healthcare Act, basically Obamacare. Now, yesterday, the Senate failed for the 11th time to advance a House passed measure to fund government until November 21st. No vote on advancing the funding bill is scheduled for Tuesday. The next vote is set tomorrow. Actually, it will be later on today, whereby the House Speaker Mike Johnson and Senate Majority Leader John Thune both said Tuesday morning that the November 21st funding deadline in the GOP bill might need to be extended if the shutdown does drag on, whereby they did say Democrats are eating up on the clock. What is this going to happen? We are talking of a lot of money being lost in the US economy. Statistic has it almost 400 billion is going to be lost every week as a result of the government shutdown. This is more than 0.1 to 0.2 percentage points of GDP if this continues to persist. And how are the markets going to react to this? Now, looking at the Fed Watch tool, the next meeting we are anticipating of the Federal Reserve is going to be in the next 7 days, 10 hours and counting, whereby there's a 96.7% probability that we might see interest rates being taken further down to 375 to 400 basis points. This is going to be the second last meeting of this year, whereby the final meeting is going to be 10th of December, whereby we do anticipate interest rates will be taken even further down to 350 to 375 basis points. That's going to be it for the news. Now we want to switch gears to whereby this is the most important part of us traders. We look at fundamental analysis. We look at the news releases. We look at the data. But it reaches a point whereby we ask ourselves, how are we going to apply this information? How are you going to utilize this information for you as a trader to find opportunities in the markets? Now, starting off with gold once again. Gold yesterday did tap into 43.78 region, which is a level of resistance that we have been seeing gold make quite of late. But the most interesting thing that did happen was that we had the massive drop in over 10 years on the gold metal, whereby prices of gold moved almost 6.5% to the downside in less than 16 hours of trading. This was more than 2,800 pips in gold in less than 16 hours. This was quite astonishing. Looking at it, whereby could this be a short-term retracement, or could the trend start changing to the downside? Now, looking at how prices did open today during Asian session, we did see prices move aggressively to the downside after the markets did open during Asian session today. This was almost 1,200 pips, more or less 3% of the total value of gold. But we are seeing the markets currently trade well above the opening price of the daily candle. And the question, the $1 million question, the golden question that we do have right now, if I can switch to a higher perspective, we can see ever since late August, prices of gold moved aggressively towards the upper side, but it has reached this particular point and we saw massive movement to the downside. Does this mean that potentially prices could start moving back to the downside? Are we seeing institutions offload their profits from the gold long positions that they do have, or could this be a short-term retracement for the markets to continue moving further to the upper side? Now, looking at it, yesterday we did have this analysis whereby we had highlighted 43.78 region and 42.05 2025, whereby we did have a speculation of if prices do break to the downside, there's a potential it could continue moving, and the analysis did play out to the book, to the T actually. But we are looking at this region. If we do get prices coming back to 4205 region, 4200, which is a psychological level on the precious metal, look at it this way. This was a region of support that was formed. Now the support has been broken. Could this support now come back, act as a resistance if prices do happen to come to this region? If we do get a candlestick that fails to close above 4205 region, then I would consider looking at more shorting opportunities on the precious metal. But on the other hand, if we do get a candlestick that closes well above this region, I would want to look at more net long opportunities, potentially prices coming to fill in the inefficiencies that we left yesterday with the massive move to the downside. Now, the precious metal gold is going to be very active today. Looking at it from a perspective, today is Wednesday. We do have today, tomorrow, and Friday for the weekly candlestick to close, meaning we still have time for the markets to move. Once again, gold is going to be a very attractive asset, but risk management is going to be very crucial, whereby these probabilities, the volatility is quite high in the markets currently at the moment, and you need to ensure you know how much you're putting on the table. Now, looking at silver metal, once again, we did have an analysis whereby we were looking at a speculation if prices breaks below the $50.854 an ounce, there is a potential prices will move to the downside. And alas, look at what happened. We had a candlestick that broke to the downside, closed well below that region, and we did see prices of silver moving quite aggressively to the downside. Now, could this region that was once support now act as a resistance if prices do come back to the $50.8 an ounce region? If we do get a candlestick that fails to close above this region, then I would consider looking at shorting opportunities, potentially prices moving back to the downside, because the precious metal could be in overbought territories. But on the other hand, if you do get a candlestick that closes well above $50.8 an ounce, I would consider looking at more net long opportunities, potentially prices coming back to all-time highs, which is around $55 an ounce on the silver metal. Now, I want to look at equities, starting off with the S&P 500. Remember, it is earnings season, whereby most of these companies are going to release their earnings the entirety of this month, and we are looking at promise whereby these companies are actually posting really good profits, and this is going to affect the prices of the S&P 500, whereby I'm looking at potentially prices moving further to the upper side. We do have this region of resistance that is currently at around $6,768 an ounce, not an ounce, but sorry, this is the price of the US 500. If we do get a candlestick that closes above 6,768, I would want to look at more net long opportunities on the S&P 500. Currently, at the moment, the equities are firing on all cylinders in the United States of America. We are currently at all-time highs on the S&P 500. This has been one of the best gains, the best moves that we have seen on the S&P 500 in more than 10 years, whereby in less than 142 trading days, we have seen the S&P 500 move more than 40% to the upper side. And could there be more? Yes, there could be more. Where that came from, if at all these companies are going to release positive earnings the way they are currently at the moment. We are looking at prices trading well above the 50-period moving average on the daily perspective. And once again, if I do get a candlestick that is going to close above this region, I want to look at more net long opportunities on the S&P 500. The same could be said on the Nasdaq, which is a tech-heavy index. Currently, at the moment, is at that region of resistance, similar to what we are seeing on the S&P 500. If we do get this candlestick closing well above 25,232, I would consider looking at more net long opportunities, anticipating prices will move further to the upper side. If I can switch down to a 1 hour time frame, looking at how prices are reacting at the moment, we have had quite a bit of consolidation for the past few hours, 40 hours to be exact, whereby prices has neither been making clear higher highs or lower lows. But if this candlestick does close above Once again, 25,232. I would consider looking at more net long opportunities. On the other hand, as a trader, you need to look at both probabilities. We do have a region of support currently at 25,060, which is a psychological level. If you do get a candlestick that closes below this region, I would consider looking at shorting opportunities, potentially prices coming back down to fill this region of inefficiencies that you do have residing below 24,897 region. Once again, we traders do react to price action. Now, looking at the Dow Jones, which is the US 30, the Dow Jones Industrial Average. This was our analysis yesterday. Prices didn't come back to the golden retracement region, but we did see quite the interesting amount of buyers in the markets. And this is going to give me confidence in what is going to happen in the US 500 and the NASDAQ, because already the US 30 has started this journey to the upper side, meaning the following equities, which is the S&P and the NASDAQ, could start following suit very soon. Now, we are currently trading on the opening price of the daily candle. I would want to look at how prices are going to react in this specific candlestick and also towards New York session. We do have President Lagarde, who's going to release her speech also today, and we want to listen to her. What does she have to say about the global economy? Where does she think the European markets are headed to in the near future? Which brings me to euro against the United States dollar, whereby we have been seeing it rally to the downside. The trend has been to the downside. Yesterday, we did see the dollar gaining a bit of strength, but are we giving it back currently at the moment? And this is something I would want to take keen eye on. Once again, you can see how prices are really struggling to move to the downside, whereby we have larger shadows and we have smaller bodies, meaning buyers and sellers are really fighting for these markets. And who's going to give up first? Who's going to bow down to the other one? Only one way to find out. And I would want to consider looking at shorting opportunities if prices do go below 1.15965. But on the other hand, I would want to consider looking at net long opportunities if prices do move above 1.16159. I would want to look at GBP USD. We have just seen inflationary data coming in for the British pound, whereby, yes, it was slightly worrying. And as a result of that, we did see the dollar gain against the British pound slightly ever since the data was released, whereby we are looking currently at prices 50 to 60 pips to the downside, which is more than 0.3% of the total value of the British pound against the United States dollar. Potentially, prices could come back down to 1.32616 in the near future. As a result, if the data does persist to come out negative for the British pound, we are seeing once again a strength in the dollar, whereby most of the assets against the dollar are performing quite poorly as the dollar is strengthening. And I would want to look at the dollar index, whereby yesterday we did see it gain quite significantly from the opening price, whereby prices did open somewhere around this region. It did move almost 0.45% to the upper side, meaning, yes, investors are now gaining confidence on the dollar. Could we see the dollar dominance coming back in the near future? This is going to be quite interesting, noting how price action is going to be, especially looking at gold, looking at what the Fed Reserve are anticipated to do next week. We are looking at the European Central Bank potentially intervening, saving the European economy. We are looking at geopolitical tensions between Russia and Ukraine. No peace deals are currently in sight. And this means one thing: a lot of opportunities for us traders in the markets. Each and every day, the markets provides us with a lot of opportunities to take away money from it. As a trader, the most important thing is capital preservation and how you approach these markets. This is going to be it for me on the morning market call. I can see we don't have any inquiries currently at the moment. I would want to leave it at that. And before I do, I want to show you about this calculator, which is called the HFM Risk Percentage Calculator. One of the best tools you're ever going to find, ladies and gentlemen. For those who are going to be in Thika, we are in Thika currently at the moment at the Cascade Hotel. We are going to have a Nairobi pit stop tour. So today is going to be thicker, the final day. We are once again at the Cascade Premier Hotel. From the 23rd to the 24th of this month, we shall be in Kiambu at the Phoenicia Hotel. Then on the 25th to 26th, we are going to be in Isli at the Nomad Paradise Hotel. Then we are going to conclude the pit stop tour in Kitengela on the 27th and 28th at the Galaxy Resort, which once again is in Kitengela. Tag along, a friend. We have a lot of prizes to be won for you as the traders. Now, speaking about the risk percentage calculator, this is going to be an important tool for you as a trader to help you calculate your lot size, which is going to be very important. The value that you get here, this is whereby you go now over to your HFM platform and input the lot size here. Once again, there are going to be a lot of probabilities. The markets are currently showing us a lot of opportunities, and we need to capitalize on the volatility. It means we have an opportunity to make a decent living as a result of this information. That's going to be it for me. Take care of yourselves. I shall see you tomorrow at a similar time. Cheers.